Hello, everybody. Welcome back to the Penny Lane podcast. Today, Blaine brings on Ken Mooso, the co-founder and CEO of the PersonaFi app, to discuss how they are revolutionizing finance social media. It's a great conversation with tons of insight. Today's episode is sponsored by Magic Mind. Don't forget to follow our YouTube channel and rate, review, and subscribe on Apple Podcasts. Enjoy.
Hello, Ken. Welcome to the Penny Lane podcast. How are you?
I'm great. And yourself?
Doing well. I'm so glad we could get this scheduled.
Yes, we're long overdue for this, and happy to be here.
Absolutely. So you and I have had several to many conversations before, so we do know each other a little bit, but I don't know that much about your background. Do you mind giving me just the Cliff's Notes?
Yeah, certainly. So I've spent my whole career within the financial services industry, so about 12 to 13 years total. I spent about 5 years in wealth management, and I've always been passionate around finances.
Cool. So where did you do those jobs? Did you ever go to New York to do wealth management?
No, so it wasn't as sexy as working on Wall Street or working as an analyst right there in the heart of Manhattan. But instead, I started off actually in retail banking. So I started off as a teller, then I became a banker, then worked in the business side of banking, and then went up into management over at Wells Fargo. And then I decided, like, hey, I didn't really have a passion for managing or working up the corporate ladder, but instead I was more interested in growing wealth. And that's in fact why I chose to get a job within and choose a career within finance or within banking, because I wanted to learn how money works. So just saying that, hey, there was the financial advisor at the branch. I was like, okay, well, let me get licensed, become a licensed banker to work with along with clients with them. Then from Wells Fargo, after being licensed as a banker, I became fully licensed over at Merrill Lynch as a financial advisor, where I spent my last 5 years before jumping the ship and starting PersonaFi. But working at Merrill was a great experience, where I got to talk to thousands of people about their investments and portfolios. You learn about trading. You work in an office with several guys, and so you get exposed to a lot, and you learn quickly in that environment.
Where do you get your clients for that when you're doing that?
Yeah. So because Merrill Lynch is owned by Bank of America, it was very easy to be able to field clients, because you had bankers, you had lenders be able to refer clients to you. You had the existing clients that they were able to hand off to you. Go, okay, hey, let's look for ways to deepen your relationship. And in fact, that's actually where we had most of our success. Instead of going out, say for example, like Edward Jones, for example, where you're knocking on doors and pounding the pavement to find people, or going to communities or golfing for clients. Instead, what we did was we talked to clients with, say, just $50,000 or $100,000, and said, hey, based upon your current financial situation, it's like there's probably a good chance there's an old 401k out there, or another larger account. And that's where we try to, instead of going for cold clients, we just try to win our existing clients more of their business with us.
I'm going to ask you a personal question, as I always do. It's always about me, my podcast.
Yeah.
I'm trying to get a small business loan for another business that I have, and the way that I've gone about that is I went to like sba.org, and yeah, am I on the wrong path here? Because I feel overwhelmed. I have like probably 15 banks have reached out to me, and I don't know what to do now.
Okay, so what little I can recall about SBA loans, the requirements were pretty substantial. It was more like, okay, it's more suitable for an established small business. So if you're looking up for startup funding for a business, the SBA loans, from what I remember, were not the way to go. So hopefully that's
interesting.
that helps
Well, yeah, I guess I'll It's a 6-year-old business, so I
Okay.
don't know. I'll figure it out. But it is interesting how like now I don't know these people at all, but it's just kind of like who can get in contact with me, and like I don't know. I don't really like that as much, but
Yeah, or I mean, there's other ways to be able to raise capital for your business. Maybe like you could look at crowdfunding or friends and family. I'm not depending on how much you need. You can use like a convertible note to be able to raise so that you're not giving up exactly equity immediately. Or you can be able to get hard money loans because just from my experience as a banker, I was like, man, this is ridiculous. It's hard to actually get money for the people that need money and have a legitimate purpose for it. So
so I like bank at Bank of America, and my first thought was like, well, I've banked here a very long time. Maybe I should go this route, but I went the SBA route. We'll see how it turns out. Anyway, just thought you might have a secret way.
no, no, I wish I did, but unfortunately not.
Okay, so while you're working at Wells Fargo, that was the last place you worked. Yes,
It was actually Merrill Lynch was the last
Merrill
place.
Lynch. Merrill Lynch. Did you have the idea for PersonaFi there, or did you just want to create something on your own?
So it was the seed was planted at Merrill Lynch for sure, but the idea wasn't conceived until after I had left the firm. So when I was working at the firm, my and this was my biggest struggle was the firm was, and this is not exclusive to them, but a lot of the investment firms out there are in fact pushing for cookie cutter portfolios, which I wasn't a big fan of because people have various different they have very different financial situations that call for different types of investment strategies. It's not just investing, but being able to have it match their financial plan. And these very risk-based cookie cutter type portfolios were just we're oversimplifying it. And it's not just also the financial plan, but also investment preferences. So some people want to invest in something that's some very specific corporations. They're like, hey, my parents used to work there. It's very sentimental to me. Or I had these stock certificates that were given to me since I was a grandbaby. Or I only want to invest in, say, for example, ESG. And these once again these cookie cutter portfolios from a risk standpoint from the investment firms, it was very easy for them because it mitigates a lot of liability for them by just blanketing everyone. But for a lot of people, it's really underserving them. And then on top of that, they're being charged really high fees. I think I really think that people are going to wake up and just walk away eventually once they realize how damaging these fees are.
Yeah.
So
Um,
yeah, but just to continue, so the idea was like going, okay, so I saw that and said, man, there's got to be an easier way for people to invest. So I was like, this is not working. I mean, this it's not working for me. So I mean, like I wouldn't. I'm selling this, and I wouldn't even do it. So I said, there's got to be an easier way for people to learn this. So I had left my firm. Um, and then I discovered when talking to friends that they'd really like to ask each other what they're investing in, and it was hard for me to resonate with that for a long time because I said I would never ask you. I don't want to know what you're investing in or your opinion. It's
yeah.
not that because I do this professionally. I do this for a living, and I know how to draw my own conclusions and invest and research on my own. So after hearing that from several of my different friends, I said, well, let's test this idea out. I want to be able to help people, but let's figure if there's a business behind this. So I started posting trades on social media, and immediately dozens of friends started messaging me. I mean, friends were driving to my house because before I didn't really advertise that I worked in the industry. If you work in the industry, You can't because there's a lot of regulations, and your investment firms are pretty tight. For example, some firms don't even allow you to even be on social media. Period. So after having a lot of friends take interest, go, okay, Ken knows what he's doing. I mean, they're driving to my house, they're calling me up. I created a Facebook group and said, okay, well, let's see how far we can take this. And by that point, the pandemic had hit, so it's there's a massive amount of interest and demand for this type of content. So I was able to take just a handful of people in a small Facebook group to about 30,000 people within a year.
And were you mostly just posting your trades, or what was your main content?
Yeah, so I was posting trades. It was a lot of times I was answering a lot of people's questions about what they thought about the market or a very specific investment. I was doing what we call like live at fives, where I was in the evenings. I was going on Facebook Live and just talking to them about a recap about the market or what I'm seeing as far as in the macros. And then it got to the point, even when we were about like 5,000 people, where it just got too overwhelming for me. There was just so many questions I was fielding that I said, okay, I can't, there's no way for me to keep up with this. So what I'm going to do is you can subscribe to my newsletter. Therefore, instead of asking me or me answering your questions, you can get my thoughts all into one easy newsletter that went out once or twice a week. And then I was sending out trade alerts via text message. So I had
Did
a
people
text message.
have to pay you to be in your Facebook group?
No, so we actually kept it free. It's still free to this day. And then, but people, if they wanted to get my investment analysis about what I'm doing with my trades, how I'm viewing the market, and how I'm reacting to the various different market environments as it's constantly evolving, they can subscribe to that content. And at first we charged $5.99, and then we saw that there was like, hey, there's a lot of massive demand for it, so let's increase it to $10. And then we eventually, or I eventually increased it to about $16 per month.
Cool. Okay. So you've got a Facebook group and a newsletter, and you're
Yes.
making money from your trades and your
Yes.
analysis of the trades.
Correct. Yes.
Okay. All right. So where do we go from there?
Yeah. From there, that's I got, and this was about a year ago, where I had another roadblock where, hey, I'm too busy. So okay, the idea of PersonaFi has been born. I've left my firm. It's been born. Okay, it's fully developed. We got a plan. We're putting it forth. And then I came to a point where, hey, writing and researching and doing the trade alerts on my own was too difficult. So what I then started doing was recruiting people within my network and from our own Facebook group to start doing the same thing that I was doing and replicating it as we were developing and building out the application, which is now PersonaFi. So initially, I started with about 10 people, and then then we've grown it to 15, and then we've grown it to about 30 people as of today. And now, instead of going through the Facebook group and through email and text alerts, it's actually all built onto the application, where you get the full experience of, hey, I got a community, and then if I want to subscribe to other people's content, I can subscribe to it, where I can read what are they doing with their portfolio, I can get their trade alerts and get that portfolio analysis put into practice.
Interesting. So what level trader is this best for?
So for me, I like to say I'm kind of well-rounded. That's kind of what I had to be as a financial advisor. You just can't go, hey, well, I only specialize in this situation. So, but we're seeing various different traders, from doing options to penny stocks to crypto and NFTs. So we try to have a wide range of content and creators as we bring them onto the platform. So I think that but I do see that there is a high interest in both long-term stocks, and then for anything short-term, a lot of people like to defer to options to get
Yeah.
something quick and easy.
Yeah. So, how do you screen the other creators?
So our initial screening process was looking to see, can they create content? So that was the main thing. Was it's not just about are they knowledgeable, but can they have the ability of writing out an investment analysis? So that was one thing we screened for. And then the second thing that we screened for was the actual knowledge. So we didn't want someone that had, say, just a few weeks or a few months underneath their belt, but at least, I mean, and we kept the requirement relatively low, at least a year underneath their belt, and just saying, okay, can they form at least a rationale? Because I don't want to determine what that rationale should be or what a rational investment analysis should look like, even though I do have my opinions of what's quality and what's not. But we want to allow the free market so to kind of determine that. And so when we looked at it, can they write an investment analysis out? And then two, can they develop a sound rationale behind that? Whether it's just going, hey, a gut feeling, and you can make a strong argument for that. At least for me, I'm okay with that, even though I'm not going to go off of your gut feeling.
Right.
I kind of something based upon that. But that was kind of the main thing. The main two things we looked for was, can they write? I guess the ability to write and then formulate an argument.
Okay. So you don't have to have like, you don't have to submit your trades or anything, right?
What do you mean? Yeah, so for I guess if you're saying applying, they initially didn't have to submit their trades to us for us to be able to backlog and see what was their performance. And I think that would be an unfair, I guess, an unfair way of looking at people. For example, you take some of the best hedge fund managers out there, and some of them have a losing streak that's beyond belief because it's really just one big hit. Now, I'm not looking for someone to come onto our application, produce a grand slam, but it's once again, it's looking, can they write and create, and then two, can they make an argument? Whether how good that argument is, hopefully it's a sound one, but can they make an argument? That's really the two things we're looking for. Plus, I guess you can say just the minimum of like, hey, at least they had some decent amount of time in the market, but we always got a sense of that by reading the investment analysis.
Interesting. Okay, so how many people are in the community now?
So we still have our Facebook group. It's still about 30,000. We have PersonaFi, which is over 6,000 people on the application. It's they're both fairly active with a lot of content and a lot of people sharing, and we're still growing to this day.
Cool. So how did you personally pay for the writing out of the app and everything, or do you have investors, or how does that side of it work?
Yeah. So we raised about $900,000 from friends and family and crowdfunding. That's we raised through what we call a SAFE. It's an instrument that's similar to a convertible note. It just says that, hey, we're going to give you equity in the company at a future date because our valuation is so subjective. Let's save that argument and look at other milestones of other companies within our vertical and at our stage that based upon our current traction that we know that we can achieve, and therefore at that point or at a future date we'll give you X amount of equity. Therefore, we're not over diluting, and then we're not having to waste our time on this argument. It's mainly just we want to sell you on the vision of both our mission and on the team, and let's just kind of shake hands and move forward.
Cool. It seems like a nice way to do that. I mean, and the friends and family seems nice. So, how did you have to? I'm actually with the podcast in this stage of the podcast. Did you have to come up with like your elevator pitch and really get that down?
Yes, you definitely have to and you're always developing your elevator pitch. Even to this day, I'm still practicing and changing because you start to learn new things about your own project. For example, we just, I don't want to share exactly what it is because it's kind of like our secret sauce. But we noticed that one of the features on our application has been used, and we didn't even advertise this feature, but a lot of users have been using it. So we'll start initially about like 3 users discovered that we had this feature, and then it grew to 10, and then it's grown to about 15. Now it's about 30, and they've been using this very one specific feature where now it's in the thousands. The growth on it has been 1,000% month over month as far as usage. So right now we're like, okay, well now it's kind of changing our story because we didn't think that was going to be a thing. But yes, your elevator pitch has to be sharp. You have to be able to explain what you do within a sentence or two max. And people need to understand what precisely you do and exactly everything that you don't do within those 1 to 2 sentences.
Interesting. Did you have, like, how long did it take you to raise the money?
So that 800, so it was about 900K. So that took us about a year. We raised that last year. It's been about a year since we last raised, and in fact, we're actually getting ready to raise again. So, in fact, we're making the announcement today.
Ooh.
So, yeah. So, ironic on the timing. And we're going back to our past investors, like, hey, we'd like to raise again. This time we're only looking to raise. We're going to be raising less, mainly because we want to hit a few milestones and not overly dilute ourselves. And hopefully we can reach what we call our Series A by that point.
So how did you learn how to like create the company, or how much of your investment background led you to figure out how to sort of switch into this side?
Not as much as I had hoped. I mean, I understood a little bit about corporate governance, that there's a board, there's shareholders, there's various different share classes, there's voting rights, and there's different clauses when it comes to dilution. So I at least had that of a background. Having worked with some what we call accredited investors, those are typically people that like to invest in instead of your traditional stocks and bonds in the public markets, but they like to seek alternative type of investments, whether it's real estate, small businesses, or in this case, venture startups. So I at least had a somewhat of a background, but I never had really applied it. It was just mainly, hey, I got books, I had a designation around it, but never really had too much of an opportunity to put it into practice. But a lot of it has been I've been learning from advisors, YouTube.
There you go. There it is.
Yeah, a lot off of YouTube. It's education is out there. A lot of information's out there for free, so you got to grab onto it, but bring on advisors that know what they're doing, because even though YouTube does cover a lot of it, there are scenarios of which every startup founder will run into where you won't find it on YouTube. It has to be like, I need to call an attorney, or I'm going to need someone that knows how to navigate this situation.
I have one of my very, very good friends. I think I mention her all the time. She has built a company from scratch, and like her goal is to go on Shark Tank and be able to get a shark and the whole thing.
Yeah.
And she's doing amazingly well. But she has a board of advisors that are like experts in all of their field, who she really leans on when she's like continuing to scale the business, which I just think is like, as someone who would like, I own 2 businesses and I work, like that would be so nice if it wasn't just me, because if I don't know the answer, I'm like asking a friend, or just figuring it out as I go, and how much easier you could climb the ladder if you had that. Oh, I'm so excited to tell you something. You know how I've been posting my P&Ls on Twitter and they've been getting so much better?
Yes.
Okay, so I've been using this new product called Magic Mind. And, we're really into like biohacking and making our brains better. And it's full of nootropics, and it is phenomenal. I used to take a ton of Adderall, and then, as you know, I had to stop because I had the heart condition. And this is so much better than Adderall. It is like, I'm so calm. I'm so focused. I'm so efficient. I have been doing things that I've been putting off for years, just because they're like on my list and I'm just doing them. I'm not like that. I'm a creative.
So this is the magic sauce, huh?
Yeah, you just take this bottle in the morning. It says it's best to try it for 3 days. And I thought maybe I was having just a placebo effect. So I got my husband on it. He's will not go to work without it. And then I also have my mom on it. I gave her 3 bottles and she called me yesterday and was like, I have to come over and get more bottles just so that I have them before my order arrives. We're all on it. And man, our minds are really popping.
Wow. Sounds like I am missing out.
Yeah, you should try it. Let me tell you how. You can go to magicmind.co/penny, which you can also find at the link in this episode. And if you use the discount code penny20, you can get 20% off a one-time order or 40% off a subscription. Now, I would recommend you go ahead and get the subscription, but if you want to try it, that's fine too. And this offer is only good for the next 10 days. So we have to get the whole team on it. Can you imagine how streamlined the podcast will be?
Sounds like a game changer to me. 40% is a lot.
That's a lot. That's a big percent. I really do want to get us all on it so that we can just be like trading superstars and podcast superstars.
Well, I'm going to the website right after this then.
Okie doke.
Yeah. Having a board of advisors is really helpful I see two ways that they're very at least helpful for me. One is, I think you kind of alluded to, is that you're not alone, because it is very lonely to be in a startup. You're working on something to create something that's never been successfully created. I don't say it's not been attempted, because almost every idea has been attempted out there. So having advisors or other people behind you that can cheer you on, it helps tremendously, because it is daunting to be able to pursue this path alone. And then the second thing is having that expertise. And I think one thing that's not probably hounded off enough is having good board of advisors. I know that most of your audience is around stock or investing, but at least for me, I had to learn the hard way is that because someone's smart and successful or wealthy doesn't mean you should take their advice. In fact, you should be very, very careful about taking those people's advice just based upon that. I know that, and you will run into them, that they're from, say, an Ivy League school, they're very successful, they had an exit. You need to be extra cautious around those people, because they are very smart. But because they dealt with their situation or their startup in business doesn't mean it's directly applicable. Yes, there's some, but you want to find someone that is as applicable as possible, whether it's very specific in marketing or legal or whatever it may be that you need help in navigating, because you will, and I've learned this, that you will get bad advice that will hurt you. So that will put you where it will limit options. So that's one thing to be careful about, and maybe even going through a trial period and making sure you have a set cadence involved is important.
Interesting. That's super interesting, because you certainly would. Like, I would take advice. I mean, I have like my whole life, but I do find that at the end of the day, no matter how good the resume is of the person who gives me the advice, there is always like a gut feeling, and like I usually tend to go with what I think is right, for better or worse. You know what I mean?
Yeah, I like that you said gut, because there's as I've made mistakes in my in this startup and starting and creating PersonaFi. I've a lot of times, as I was asking advice from different people, I'm like, I don't know if that sounds right. I don't know what it is, but I went with it, and then sure enough, you come down another obstacle or a month down the road and realize, wow, that was a terrible decision. Because you, as the owner of your podcast, or me, the owner and founder and CEO of PersonaFi, understands more about the business and has more information. And the other person is well-meaning and they want to help you out. They don't have all the information, so therefore they're giving you advice and drawing a conclusion with the little window that they have, which is not perfect by any means.
Totally. So why would I, as a retail investor, go and get on PersonaFi and actively engage in it over Discord or Twitter or the other StockTwits, the other places I have available to me?
Yeah. So what I see is that there's a huge gap between when it comes to type of information out there. So when you come to traditional, say, investment research, there's what we call like the boring Barron's of the world. It's like, hey, I can go to Barron's or Morningstars, and a lot of our generation, mine and yours on younger, doesn't exactly resonate with that. And so what we're seeing, the behaviors of our current generation and what I call the modern day investor, is that instead they're going to social media. Like you said, okay, well, what's keeping us from Twitter and Discord? And the quality of information deteriorates dramatically. So I want to give you an example, and I'm and hopefully you don't know this. You may know this. Well, I'm not going to say the name, but I had, for example, I went onto a Twitter space with an influencer. He had about 150,000 followers, and in his Twitter space, he was getting grilled really, really bad. He has a Discord channel, and he does the same exact thing as me, where he's posting trades and he's talking about his investment analysis. Now, the reason why he was being grilled and being cornered by, and I'm talking about hundreds of people, and now hundreds of people can't speak in that Twitter space, but the say 5 or 10 guests were not letting this influencer off the ropes by any means, was saying, I don't believe that you're making these trades. And so they're all insisting, like, we lost money. And this person says, no, had you followed it correctly, you didn't follow my directions, you would have made money. And so and I'm only coming to a part of it, but I joined just in time for the people, like, they were literally yelling at him, just going, no, you're a liar, that's not what you said, and that's not what happened. So there also comes, when it comes to the quality, it also comes to lack of trust. I think our generation is very trusting that we take people at their word and go, okay, they're doing it, until when it comes to losing our wallets. And I think a lot of us have been there, where you've trusted someone, you follow them or took their advice on a specific trade, and you're like, man, did they really do it, or do they really know what they're talking? So the reason why you want to go to PersonaFi, because we're that middle ground where we bring the quality and we have that trust, because you know it's verified and know that's happening in reality. The way that I look at PersonaFi and the future PersonaFi, it's almost like a public investment journal that's personal. So I can be able to document about my analysis, my trades, you can refer back to it, and you can be able to see what is my track record and how I'm performing. And therefore, as a subscriber that's putting forth dollars, both to subscribing to that content and putting into the market, you can make more an informed decision going, okay, does Ken only knows what he's doing? Does he know what he's doing? But am I willing to also put my money behind him and following his trade? So that's why people are coming to us, and why PersonaFi is so successful at this point.
Because are most of your app users from your 30,000 Facebook people who know you? Are you the main person that they're getting their advice from?
So right now, I currently have no subscribers. So before, I had over 1,000 people subscribed and paying for my content. The highest point was like 1,300 people were paying for it. So I had taken a step back about a year ago. I had handed it off to other people and allow these people to resubscribe to other different people on our platform. So to this day, right now, people are looking at people that have worked at hedge funds. from say Millennium to say Fidelity, from Vanguard, to people that are just self-taught from the University of YouTube. So we have a wide range when it comes to skill sets and backgrounds for people to subscribe to on PersonaFi.
Interesting. So what's your plan, your future plan for getting more users on the app or subscribers on the app?
Yeah, so we're working through with our users at this point to look for how do we create network effects. I think that we look at the most famous example of network effects is Facebook, where they were able to work through the universities and keep it exclusive. So we're looking for ways to be able to take our power users and get them to be advocates for our brand, and ways to, like, so for example, how TikTok rewards their users and gets their users to do something that's benefits both TikTok and the users, like by saying, hey, why don't you share that TikTok video on Instagram or on Facebook, and it has the TikTok logo, that, and people became aware of it. So we're trying to figure out our shareability that's going to allow our power users to be able to reward themselves, as well as find a way that benefits PersonaFi. We are running ads. We have a marketing agency. We're working with influencers in our space to be able to create awareness about what we're doing. And in fact, that's actually our next move, is to be able to work more closely than what we have had done in the past with working with influencers.
I just think, I like do marketing stuff, so I was just thinking. All right.
Yeah.
So influencers.
Yeah, and maybe like the more correct terminology is creators. So before, is when you asked me, hey, what are you doing to validate or to kind of screen various different creators on the platform? We want to actually get to a point where anyone can be a creator. It's not going to be just going through this analog process of applying and us screening and hopping on a call with you. But we want it where, just like Airbnb, Brian Chesky doesn't drive to your house and goes, okay, do you have a working smoke alarm? You got clean sheets. But you, within minutes, can be able to take photos of your house and post it and have people book your place for Airbnb. So that's what we want to be able to have happen. And in fact, that's actually our next stage of development, where anyone within minutes can be able to start creating, monetizing, and getting their friends to be able to subscribe to their content. And I know that a lot of people, from talking to our users, has that one or two friends that they like to talk to and collaborate when it comes to investment ideas.
Cool. So are you going to become like a media company or like a content creation studio type company?
Yeah. So I do see, the vision of PersonaFi is to be like, we like to call it like the Barstool Sports for finance, because there really is. And when you think about it, there hasn't been anyone that has really grabbed this space or is going and tackling this opportunity. Because you look at, say, political news, there are, versus traditional news sets like your CNN or your Fox or whatever channel you choose to subscribe or watch to. There, on social media, there are groups, if you will, that are creating their own content on social media in a form of news. And there isn't, and you see that with politics, you see that with sports, but you don't see that with finance. Now, there are influencers, yes, and creators in the space, but there really isn't a brand, if you will, that is grabbing people. And that's why we see ourselves as the Barstool Sports of finance, and that's the end vision of what we want to be. Is not only do we want to have creators, but we want to start recruiting top creators, have them be able to support our colors, our brand, where they're proud about it and saying, hey, I'm on PersonaFi, hey, exclusive to PersonaFi. And that's one thing that we encourage our creators to do is to share that, where we prop you up, we run, we have graphics and run ads behind you, and they do the same thing likewise, where it's a mutual beneficial partnership of growing
Interesting.
together.
I was just having a sponsorship conversation with someone, and I'm getting frustrated so I have ad slots in the podcast, as anyone would. And I have Last Bottle Wine. Love you guys. Thank you. They're like our go-to. They sponsor every season. It's like such an incredible partnership, and I love the company. So I don't make any like revenue or commission, but like literally all my best friends are just buying, all my family buying, everyone. I am like an incredible ambassador for them because they're just treating me well. They're letting me make the podcast, and I think they have a fabulous company. So like that is great. And then I go into other sponsorship meetings. I'm like, well, it costs X, and I'll do this, and I'll do this. And it's sort of like I've gotten to the point where I'm like, pretend I'm a golfer and you're paying. Like, sponsor me and let me do what I do. And like, but that's a hard sell because people want numbers and da-da-da and da-da-da. And it takes a very special relationship to do. Like, you have to think the creator is very, very special to be like, I'm going to trust you to do what you do, and I'm going to sponsor you. Wear my paying hat and do whatever you want to do, and that we're good. And I think that's very hard, especially in the podcast world. I mean, I do create a lot of content with Instagram, Twitter, podcast, all of that. But like, it's so incredibly saturated right now. And I do know that the podcast industry is supposed to like quadruple or something this year. I don't know exactly what it is, but like it's on fire.
Yeah.
But I've been creating content since I started writing a blog in 2006 and just transitioned it from like the blog to Facebook to Instagram to Twitter to podcast, whatever. Yeah. But there is sort of a need for that kind of relationship, for that kind of like sponsorship relationship versus just a shotgun approach of like, I'm just going to throw $50 this podcast and $50 this podcast and $50 this podcast, and you don't get that synergy. Anyway, I'm on a soapbox. It's just my own as someone who is on the other side of it.
Oh, yeah, absolutely. That's interesting that you said that because I was on a call and I actually was doing exactly just what you were saying that you didn't like, because I was like, our number says this, our acquisition means this, so we need to get this down.
Right.
So that means so. Oh man, that's I feel horrible now. But it's that would be nice to have a good relationship, and I think that's good that develops that over time. And I think that's what's going to happen with some of the creators that we're partnering up with. That as we start to deepen those relationships. That their audience becomes more accustomed to us, therefore they convert. So this company that's using you, that you have a great relationship, they know the conversion is going to be there. They know that you're going to do a fantastic job. So, but I do understand
Totally.
from the business side, it's like, hey, you got to have the numbers
Totally.
line up.
Totally. And it's so interesting, that kind of like, especially as a creator, I'm not a super numbers person. Here, I'm going to trade the stocks. I don't really understand math, whatever. But
Yeah.
I do, there is a missing kind of piece there, I feel like, and it's,
But what's cool, what I like that you just said earlier was about how, and I'm curious to see this, and I totally believe the numbers that you said, that it's going to quadruple the next few years, and so that maybe the listeners are like, oh, I'm going to jump on my podcast, which I do agree, it's also oversaturated, but the numbers are showing a massive exodus from traditional news. I was stunned to see that it's not just even younger adults, but it's also, I mean, it's even the boomers that are also leaving their favorite newspaper or magazine that they were subscribing to in their cable news. Instead, it's like we find a lot, and it's not just trust. I don't know what it is to be frank, but I think it's beyond just trust, because I think that however you may feel about the honesty of the big media companies, but people are moving to more social media. They prefer asking their friends or a familiar face that's not behind say such and such
Yeah.
corporation. And you look at the research, like 48%, and I think people listening to this will probably nod their heads like, yeah, that's about right. 48% of all adults on the US get their news on social media. That's huge. And I think it's like what Gen Z is like 70%. The writing's on the wall. And in fact, we've been contacted by big media corporations because they're keeping their eyes on us, and as well as our competitors and others out there, because they do know that the future of news is going to be more social and podcasts. It's YouTube. It's Facebook. What, 35-40% of adults get most of their news already on
Yeah.
Facebook. And it's not like they clicked a link. It was actually like, hey, I saw such and such bring up this event, so therefore they're now aware of it, or this was trending on
Yep.
Twitter or Reddit.
I think that there is so much, like, I'm a huge fan of the Morning Brew. It's a huge reason why I started trading, because it's so concise and relatable. And I think Robin Hood Snacks, which is a podcast, Robin Hood's podcast, is so wonderful, because you get in like 10 minutes their sort of take on the market, and then the Morning Brew, that takes 5 minutes to read, and you just get the main sort of things, and you don't have to deal with like turning on the TV or whatever, but you're getting financial content from someone you trust, and that is very valuable. And I mean, well, I actually
Absolutely.
do still use my Robinhood, but I think Robinhood has been very smart. People hate Robinhood, I guess, but they've been so smart
Yeah.
in making trading accessible to anybody. Like, it's,
Yeah, I agree. Like, I feel like that as much as it's popular to dislike Robinhood, they've done an incredible job of creating accessibility and democratizing the stock market. Uh, the payment for order flows, hopefully there's a solution around that. But they have, I think that even despite the problems that they have brought more good than they have brought
yeah,
evil, if you will,
totally.
to the market.
Totally. Well, I'm so excited for all the things that you have that for the future, and like I think you're doing a great job building it, because it seems like it is like building a very solid foundation, which I always think is wonderful in a company, when you like slowly kind of layer on, like, I started this and then I did this and then I did this, versus like, I've got a company. Yeah. So
Yeah, yeah.
that's great. I'm excited for your next round of funding and the new creators you're going to be partnering with. I saw that you guys are sponsoring some Twitter spaces yourself. How's that going?
That's going okay. So we've had some. It takes time. So so there's sometimes that we have like a dozen people. Sometimes we have like a few hundred people. So we left one of our community manager, Ryan, to it. He's had a lot of success on social media and hacking and figuring out the ways around, say, applications from Twitter to Facebook to even stock twits. But he's been hosting them. This is where we want to be present on Twitter. We know that our target demographic is on Twitter, so we're very keenly focused on that. And I think that's we'll continue to host those Twitter spaces and hope to attract more eyeballs. And it doesn't have to be so that it comes and downloads PersonaFi, but by all means, yes, we ultimately want this, but we also want to be able to help people out. And in fact, part of that, we've not only are hosting Twitter Spaces to educate and talk about the market with people, but we also have a free newsletter that goes out to anyone. It doesn't have to be a user of the application. You can get it where we send it out weekly where it talks about what's trending amongst retail investors, to different plays, to our market analysis. And our writers behind it have a ton of industry background. So they're great writers producing quality content. So anyone that's interested in something that's free and that's going to help them hopefully become a better investor, by all means, we just want to be able to help
As
people out.
someone who has a company that is focused on the stock market, which is now in a bear market, so yeah, unfortunately,
Yes, unfortunately.
my hope for I have big like dreams for the future of the podcast, like 5-year dreams of how I want to build all that out. But I'm trying to like lay this foundation, and right now, my number one priority is to maintain the audience that we have on some level, so that when we go back into a bull market, I will then have seniority over the new class of traders or whatever that comes in and have like an established authority. Are you in a similar, are you feeling similarly to that?
Yeah, it's the way that we're reacting to the current market, just like public markets are in a bear market. Same thing with the private market. So it's ironic saying, "Hey, I'm raising capital in a bear market or in a recession." I'm pretty sure we're in a recession. We just have to wait for the numbers to come out, which they should be out in a few days. But we're kind of I won't say we're in a holding pattern, but we're
Mm-hmm.
focusing on the necessities, and we know that it's going to return to a bull market, so we want to be able to be an established player and have being a staple name out there for people to turn to. So we're still looking to grow, but we do understand that growth is going to be difficult in this current climate. But we are very optimistic because we are finding out that there are people that our target demographic, I'll even maybe even add, is a little bit more resilient than we had
Yes.
anticipated. So
Yes. So we're in a bear market. It is July. So, historically, people are not trading nearly as much as they are in the fall. Traders are on vacation or whatever.
yeah,
And we are maintaining. We're no longer in a growth pattern on the podcast, but the listeners that we have are
yeah,
so loyal. Like people are listening to every episode,
yeah.
and we're maintaining so beautifully that I'm very hopeful. And there's two ways to look at it, right? You could look at it as like, oh, the market's bad, nobody cares about trading, everyone lost their money, or like whatever. You could be very woe is me, but I'm like, hey, like I think we really have something here if we haven't lost all our listeners despite all of these things.
Absolutely. And here's another thing too. I'm actually quite excited for the people that are able to, I guess, hodl, if you will, through this bear market, because we know it goes through cycles, but it's going to pay off in a big way for the people that stuck with it. One thing that advisors we like to say to our clients, hey, it's not about timing the market, but it's time spent in the market. And I think that's one thing that they're going to learn from this, is that as they go through this uncharted territory of a bear market, since it's the first one we've experienced in over 10 years, it's going to be a great thing for them. So long term, it's going to pay off for them. It's going to pay off for us and our businesses and our brands. So it's it's going to be exciting times to look forward to. But I'm
For
very
sure. And
optimistic with
everyone
the
on
future.
Twitter or social media is saying that like this is a historic event in our lifetime. Like the opportunity created right now is once in a lifetime. But I definitely think that even though it doesn't feel good right now, I do think it's a historic opportunity. And
Yeah,
you just have to survive.
yeah, and I don't like to. Maybe I look at it a different way. Maybe yes, I agree that hey, yes, we have to survive, but there is opportunities, and this is maybe stealing off of a saying off of Jim Cramer. Hey, there's a bull market anywhere. I mean, I know a lot of people don't like Jim Cramer, and I totally understand. But if you find people that know what they're doing, that's part of what PersonaFi is about, is that accountability and that trust. For example, our chief editor, Greg Kilpack, He's up 85% year to date. He's been shorting the market. He's been an equities trader. He's been trading for over 20 plus years. So, and as our community of PersonaFi, we saw this coming from a mile away. So all of us got very bearish very early. And that was back from the very first correction. And back in February, it was like, hey, this seems, we know that the QE was blown out of proportion. There's talks of QT and raising interest rates. So this may be a time to abandon those cool tech stocks and look for something that are less sexy, or start buying some puts and shorting the market. So a lot of our audience has been able to not only just survive but thrive in this market because they have that community that they're able to that has that similar interest, but also knows what they're doing and helps navigate together. And I think that's what's important, is that why we're successful is because we have those people to help each other out.
My mom started a luxury real estate company in 2006. The worst time to start a luxury real estate company. But we were super small when we started. We had like 5 or 6 people, and were able to weather that recession very easily because we didn't have a lot of overhead. We didn't have a lot of staff. We were just getting started. And she always likes to say, and I think she's right, that in times of recession, people lean on people they trust with a proven track record to sell their homes. Whereas in a bull market, when times are good, sure, your neighbor can list your home, or someone who's had their license for a year. But when you really need it, you're going to go with someone who's been selling real estate for 20 years and is going to look out for your best interest. Same in the stock market. Like, nobody I know is just buying alerts off Twitter anymore.
Yeah.
And we could for so long, and it was fun and it was great. But now is the time where you need someone you trust to help build your knowledge base.
Yeah, absolutely. So that's definitely agree that you want to have that experience.
For sure. Well, in that way, this could just be like the best possible thing for you and me both. I mean, starting any kind of stock or a young stock business right now, it truly be the opportunity of a lifetime, which is what I'm betting on.
Yeah, and this seems a little weird. I didn't do this for money. At least when I think about the firm and where I left a very comfortable salary. For a lot of people that don't know, I didn't even graduate with my degree. I dropped out due to the financial crisis of 08. So it was it was tough. There was no jobs. I was trying to go to school part time, and eventually I decided, like, hey, I don't think this is for me. School's just too expensive, so I dropped out. Luckily, it did pay off for me. It was a gamble, if you will. I think it was probably one of the smartest financial decisions I made. But I got into this, even though we deal with money, I didn't go into this for money. If I wanted money, I could stayed at my firm and made the great salary I was making being paid. But instead, I did it because I was passionate about it. And I see that with you and your podcast. So the people, the true believers, if you will, are going to stick around, and they're going to weather this because it's not about the finances. It's not, we don't do this for the money. We do it for the love of the sport, if you will.
Totally. I mean, this podcast has not made me a cent, but it has paid off in so many incredible ways, in knowledge and connections, in community and friendship. Like, it's one of the very, very best things I've ever done. It's not for money.
Oh, for sure. I believe, yes.
So I feel you. But it is nice. Like, I have been really on a track of it just not costing me money. And that's a real thing. There's equipment, there's time, there's production. And so it's about money in the sense that I don't want it to cost me money too. But that's been, as an artist and a creator, it has been hard for me to put a business plan in place of, like, how do I grow this so that it's not a weight on me?
Yes.
But, I'm learning.
Oh, for sure.
For sure. Well, thank you so much for your time. I've thoroughly enjoyed myself. I can't wait. I know you'll keep me in the loop of everything you guys have going on, and I'm happy to share it with all the listeners. And I think it's just wonderful. And I so respect anybody who invests in themselves and takes a chance. I think it's just my favorite trait. I love a chance taker. I love someone who has a dream that they want to build. So,
yeah, thank you.
Congratulations.
Yeah, thank you. I greatly appreciate it, and likewise to you. It's and to me, maybe just as a closing thought and idea, at least what makes me excited and passionate about it is that one thing I recognize is that ownership is the key to wealth. So you owning your own podcast, me owning my own startup or business, people owning individual stocks, and that is my core belief and what gets me up in the morning. So anyone that's listening can benefit from that. Maybe there's one takeaway: own something that's going to appreciate and grow, that you love and help help nurture.
Totally. Being, even as a trader, like, people trade to be their own boss and to get back time with their loved ones and to take back control of their lives. Like, that's a fundamental human desire, is
Yes.
to be in control of one's own finances and how you spend your time.
Yes, I think we keep on saying like it's around finance. I don't, at least because I do believe that, I kind of like where I say it's more about the time. So even though I spend and I'm sure you do spend like 18-hour days on your podcast, and I know that I do the same thing, where it's even sometimes 24 hours in a day working on PersonaFi, but it's mainly just the freedom. I think it's more the freedom of being your own boss that's more rewarding than the finances itself.
Totally. And I certainly work harder for myself than no one else is building my dream. So,
Yeah.
No one's going to work harder than me on this.
Agree. Cool. Good stuff. So thank you once again for having me here, and I look forward to our continued conversations.
Totally. Me too. Thank you.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.